Morning students, this is part 1 video subject accountancy class 12. Chapter 5 accounting ratios are ratios analysis. Okay, so in this video we are going to see what is ratio analysis and then advantages and disadvantages of ratio analysis and then limitation of ratio and then who are the users of accounting information. Okay, so only three topics we are going to discuss in this video. First one, what is ratio analysis? Ratio analysis is the most powerful and old method of financial statement analysis. We know various tools applied for analysis of financial statement. Okay, so in that the one tool is ratio analysis. What is ratio? Ratio is a mathematical number calculated in order to find the relationship between two or more numbers. Okay, so relationship between two or more numbers that can be expressed. How the relationship, how the result will be expressed? The result will be expressed in four form. What are they? Fraction, proportion, percentage and number of times. So number of times we did one ratio. What that ratio? Inventory turnover ratio. Okay, so we in this ratio we will get the numbers is numbers. Okay, 6 times, 4 times, 5 times, like that. Okay, is so ratio is a mathematical number calculated as a reference relationship of two or more numbers. So the relationship is expressed in four forms. What are they? Fraction, proportion, percentage and number of times. Okay, so next one we are going to see the advantages of ratio analysis. I will explain with a single example. Listen, in one hand I have Hindustan Lever Limited balance sheet. Okay, so in the file it consists of 8 pages. Okay, the balance sheet consists of 8 pages. Another one file I have applied the financial tool. One is a ratio analysis and I simplified all the balance sheet in 2 pages. Okay, that also I filed in as a record. Okay, so now in my hand I have two files. Which one you will select? The file consists of 8 pages or the file consists of 2 pages? Yes, the file consists of 2 pages only, you have to select and you will select that only. Okay, why? Because so reading the whole balance sheet, okay, it's too difficult. Another one is it is too difficult to understand. Okay, it is not easy for the outsiders to understand the information stated in the balance sheet. Okay, so it is the duty of a financial manager. He has to apply the ratio analysis tool on financial statement. Okay, so the ratio analysis will simplify all the financial statement data. Okay, it will simplify, it is very easy to understand. Okay, very helpful for the outsiders to understand what the data given in the balance sheet. Okay, so let's see advantages of ratio analysis one by one. Okay, see, first one, simplifies. Okay, ratio analysis simplifies the financial statement. Okay, the whole information, 8 pages of information will be stated only in 2 page. Okay, comparison. So comparison is very important for a business concern. The company has to compare its balance sheet to their competitors company balance sheet. Okay, another one, the company has to compare its own balance sheet with the previous year balance sheet, whether to find whether the company is in progress position or not. Okay, and then it is simple, use form quickly. Okay, a user can judge a company by just looking a few numbers. Already I told that the result will be in numbers. Okay, fraction, proportion, percentage. Okay, then it is easy for the outsiders. Who are the outsiders? Lenders, investors, general public. Okay, so it is easy for them to understand. For that only we are using ratio analysis. Okay, next one, limitation of ratio analysis. If there is a advantage, definitely there will be a disadvantage. What are the disadvantage of ratio analysis? Historical information, inflation effects, changes in accounting policies, operational changes, seasonal effect, manipulation of financial data. Let's we see one by one. First one, historical information is information used in analysis. Okay, it's based on real past result. Okay, because we are extracting the information from balance sheet and profit and loss statement. Okay, so balance sheet is prepared at the end of every year. Okay, the price and value stated is based on historical price. Okay, the current price of a product, current value of asset won't be shown in balance sheet. Okay, that's the major disadvantage. We can't predict the future company performance. Okay, so it the balance sheet ratio analysis extract information from the balance sheet. Okay, so it records only the historical price. Okay, second one, inflation effect. Inflation means sudden increase in price of the product. Okay, financial statement are released periodically. Okay, year by year they are releasing their balance sheet. So there is a time difference between each year. Okay, 12 months will be there. So during that time, if inflation occurred, okay, the real price are not reflected, the finance manager won't record the real price of the product. Okay, so that is the second disadvantage. Real prices are not reflected in the financial statement. Okay, so the sudden increase may be for 3 months, 4 months, 5 months, like that. Okay, after that it will occur in stable position. So the company, the financial manager is not ready to show the real price of the product. Okay, third one, changes in accounting policies. Yes, we know that there are various accounting policies. So we know very well about the calculation of depreciation. We saw lot of method. Okay, so valuation of inventory and treatment of intangible assets. Okay, so in this treatment, various methods are there. Okay, as there are variation in accounting practices followed by different business enterprises. Okay, so a valid comparison of their financial statement is not at all possible because they are not following any stable accounting policies. Okay, so that is the major drawback. We can't compare. And then operational changes. A company may significantly change its operational structure. Example, change in supply chain. Okay, the comparison of financial metrics before and after operational changes made to misleading conclusion. The conclusion is differ if there is a difference in, if there is a change in operational change. Okay, if there is a change in operational activity, the conclusion also will mislead. Okay, so next one, seasonal effects. An analyst should be aware of seasonal product, that is seasonal factors. Okay, so that would be the potentially result in limitation of ratio analysis. So sudden demand for a product, okay, so that they can't shown in the balance sheet. Okay, some seasonal product are there for seasonal market. Okay, so that seasonal product price, original price can't be shown in this balance sheet. Okay, that is seasonal effect. And then manipulation of financial data is, so ratio analysis is based on information that is prepared by the company. Okay, so the company have to produce the actual data. If there is any manipulation of financial statement, okay, the balance sheet also be show the wrong result. Okay, so the information is manipulated by the company's management to report better result than its actual performance. Okay, so there is a chance of manipulation of data. So these are the disadvantages of ratio analysis. So now we are going to see what are the limitation of ratio is. Ratio or means to an end rather than end by itself. So for better understanding of financial strength and weakness. Lack of ability to solve problem. The second one is the ratio analysis will identify the problem, identify the area of the problem, but it won't give solution for the problem. Do you understand? It can indicate here is the problem, like that it can indicate, but it won't provide a solution to the problem. Okay, and then there is no standardized definition for ratio. There is no standard definition. Okay, and then second one, this analysis is not accepted by universe. Okay, so no country is ready to accept this ratio analysis tool. Okay, so there is no universal yardstick which specify the level of ideal ratios. And then ratio based on unrelated figures is sometime, so the two alternative information will be coincide. For example, creditors of rupees 1 lakh and furniture of rupees 1 lakh, so the ratio will be 1:1, but it has no relevance of access, efficiency or solvency. Okay, so the ratio should be used with due conscience of their limitation while evaluating the performance of an organization. Okay, yes. And then who are the users of accounting information? So in the 11th standard itself we have studied this. So internal user and external user. Okay, internal user in the sense inside the organization, external in the sense outside the organization. Who are the user? Who are ready to see the financial data, owners, management, employees inside the organization. Outside the organization, creditors, financial institution, investors, customers, tax authorities, government, researchers in the means scholars, okay, who are doing MPhil and PhD, and then general public. Thank you, children. So in the next video we can see various type of ratios. So just to go through this three major topic. Okay, so advantages and disadvantages of analysis, and then limitation of ratio, and then next one very easy one, uses of accounting information. Thank you students, see you later, bye.